Hi guys, we're group 14 for Dr. Shiroki's stock track. And my name is Indira Bonilla. I'm a marketing major and this is my fourth year here. I'm 22.
Hi, I'm Dalton. I'm also 22. I'm a finance major, and it is my fourth year at Fresno State.
Hi, I'm Andrew Hernandez. This is my first year at Fresno State. I am business management and I'm 27 years old.
So for this whole game, it gave us a hands-on experience on learning how to invest since we were all first-time investors. And so with this, we were able to invest in stocks at a catch. So we had to invest in stocks that were $5 per share at least. So this gave us the choice to either become part of it as a conservative side or more on the riskier side, but it was all a game and it was totally fun.
When we first started Stock Trek, none of us had any prior experience in the stock market. So we all agreed to be on the conservative side of things and purchasing stocks with low risk. As time went on, we started to taking risk and purchasing stocks with higher beta. Since this wasn't real money, we had nothing to lose. This is illustrated by our trading journal. We ended up losing on our riskier stocks, while others in our class ended up gaining high returns on their investment.
On February 16th, we decided to buy 400 shares of Cisco Systems Incorporated at $33.74 per share. We also decided to buy 500 shares of MCOR Corporation for $10.15 per share. We decided to buy Cisco because it was one of the cheapest large tech companies. They also have been having a 3.4% dividend over the past year, and they have had a growth rate of 22% over the past 5 years. MCOR Corporation we decided to buy because they have continually seen solid earnings, and the Nasdaq has stated that the electronics machinery sector has been constantly growing. MCOR should be one of the main benefactors of this growth.
On February 22nd, we bought 600 shares off of Cliffs Natural Resources. This was at 11.52 cents per share. We bought this because it had a ratio of 0.7, meaning that you'd get 7 cents for every dollar. And then also on that date, we bought 1,000 shares at $12.60 from Insys Therapeutics. We thought this was a popular choice just because they're trying to expand the use of medical marijuana.
Also, on February 22nd, we purchased 100 shares of MDT at $79.88 per share and 50 shares of RTN at $153.89 per share. RTN, Raytheon Defense Company, pays around 3.7% dividends. With Donald Trump becoming president, there were talks of him increasing the national defense budget, which could result in higher profits for defense companies.
March 17th, we decided to sell Cliff Natural Resources and Insys Therapeutics stocks. They had had a significant loss and had become a negative part of our portfolio. Cliff Natural Resources we sold for $9.30 per share. This represented a negative $2.78 change and a 24.13% loss. Insys Therapeutics we sold for $9.92 per share, representing a negative $1.50 change. This was a 11.9% loss. Fourth, we decided to buy 50 shares of Apple Incorporated stock at $144.19 per share. We decided to buy this stock, one, because it was very popular, two, because it was very profitable, and three, because it continues to grow year over year, and we wanted to jump on this train to make a profit.
And then on April 4th, we bought 100 shares from Wells Fargo. We bought them at $55.07. And we bought them because they were at a lower stock price due to their previous scandal. And then we also bought 50 shares from Caterpillar, which were at $94.11. They're a global market leader in construction equipment, and we bought it also because they were yielding at a 3.8% in dividends.
On April 7th, we purchased 150 shares of AMD, Advanced Micro Devices Inc., at $13.33 per share. AMD has developed a new technology, Ryzen, paired with Summit Ridge, a microchip, is proven to outperform its competition, Intel processors. This technology is able to process artificial intelligence, which puts them ahead of the game.
Overall, in our stock evaluation, we found that we had a negative 5.85% return, which is obviously not ideal. However, we did have one capital gain in Medtronic Incorporated, which was about 23 cents per share. And then we did have one really good thing for us, and that's that we did have three stocks pay dividends. We ended up with $39.87 from Raytheon and Company, $116 from Cisco Systems Incorporated, and $43 from Medtronic Incorporated. As a team, we started out not really knowing anything about the stock market or investing in general. However, we feel as though through our failures, we learned a lot about how while you can make a decent profit with these risky stocks, they can also lose you a lot of money very quickly. And in most cases, you want to kind of stay away from that. Steady earner is going to be better, in our opinion. Um, but just in general, we feel as though we would really like to start investing in the stock market as soon as possible, as soon as we have that extra capital to do so. And we feel as though after this project, we are more prepared to be able to do so. And that is all. Thank you.